Hi Team Value, JJ here. Welcome back. Well, today I want to get into a bear case for Nvidia, the stock of the moment for sure. It's rocketed up nearly $1 trillion in market cap just in the past few weeks, and it's dropped back about 15% as I speak. But this analyst says he's pretty bearish on Nvidia. He says Nvidia is not a good bet long term, and he lays out the case. Let's see why. He's a value investor, I think, by the look of it. Let's see what he's got to say about Nvidia and a few other tech stocks as well.
Today, our next guest today sees a big concern with Nvidia and its customers. For more, let's welcome in Tim Pagliara, CapWealth Chief Investment Officer. Tim, it is good to see you. So maybe we'll start there, Tim, with Nvidia. You know, investors have piled in. Tim, the street loves this name. I mean, nearly 90% of analysts who cover Nvidia say you should buy it.
Yeah, that's true. 90% of analysts still have a buy rating on Nvidia, even though it's gone up so much, which says a lot about Wall Street, really, the fact that it's gone up so much that, and their multiples are climbing, but they still have a buy rating on it, more than 90%.
Been here, but you're cautious about Nvidia. How come?
Well, for the very reason that there's so much consensus. You know, I think it was in a 10-day period, Nvidia added more market cap than Warren Buffett created in Berkshire Hathaway in 60 years. So that has to...
Wow, that's an amazing stat. More market cap than all of Berkshire Hathaway in decades, and he's one of the wealthiest people in the world, one of the best investors of all time, perhaps the best investor of all time.
Give everybody a little bit of pause about where things are headed. I was asked in an interview yesterday about which tech company will hit the $4 trillion mark first. And I said, well, I think you got to break that into two parts. Which one will hit first, and then which one's going to be sustainable at a $4 trillion company. And I chose Microsoft, but I think Nvidia will probably at this point hit first, just because of the fervor and consensus that everybody thinks that you've got to own that to be successful long term.
It's true. I've showcased a few analysts on here, including Tom Lee and others, Dan Ives, who have said that it's going to go on for another 3 to 5 years, the momentum in these tech stocks and AI related stocks. And this guy's putting some caution there, saying let's be a little bit cautious. But he has said it's probably going to reach the 4 trillion. It's over 3 trillion. So, what's another trillion at this point?
Tim, it's Julie here. When you look at Nvidia, what is your extrapolation to the rest of the market? In other words, is what's going on with Nvidia a risk sign for the rest of the market, or do you think that it's just sort of specific to it?
I think it's a little bit of both. But I think, for the value investors, the people that look in places where no one else is looking, I think it's a great opportunity because, you have Nvidia, the market cap of it exceeds energy, it exceeds utilities, it exceeds the value of GE. The last time we went through something like this was in 1998, 1999. Ironically, the darling of that era was Coca-Cola. It had been on an 18% per year compounding, 21% annual increases in dividends.
So he's talking about Coca-Cola in the dot-com bubble there. So that's kind of forgotten. There were quite a few other stocks there that ran up along with tech stocks, not just tech stocks. Some of these big names like Coca-Cola ran up, and Warren Buffett owned that. He didn't sell it. He later said he kind of regretted trimming it a little bit when it got into that bubble, when he knew it was a bubble. But, he's harking back to the dot-com bubble here, saying that this is similar to that, and being a value investor, looking in areas where people aren't looking. So there's so much focus on these tech stocks and that they've run up in market cap and multiple expansion. But there are other sectors that are unloved, unwanted, and we can see some value investors today investing or looking in those sectors.
And you could have taken a dozen companies and you could have owned those, or you could have owned Coca-Cola. It's the same thing with NVIDIA right now. You can own the entire energy complex, the entire utility complex, General Electric, or you could own NVIDIA. You could have 15 Intels I think is the number, or maybe a little bit more, or you can own NVIDIA. So how sustainable that is ultimately with long-term earnings and profits, given the inherent nature of the chip industry, it's not a good bet from my standpoint.
So what he's saying there is he's pointing to the fact that this industry, this sector has been cyclical in the past. The chips, it goes up and down, and people seem to be forgetting that a little bit. We're just saying that maybe this time's different because NVIDIA seems so good that how can this run in? And it's just had such amazing earnings, but it does go on their clients, their customers, who are these big mega cap companies. Will they slow down in their spending? And will this come to an end? Will it be cyclical like it has been in the past? And people seem to be forgetting that, thinking that trees will grow to the sky. At least that's what he's saying, and that's his thinking as a value investor. If you're a momentum investor, perhaps you're thinking a different way, just dancing until the music stops, so to speak.
Standpoint. Long term, in my experience.
So, Tim, what would be, in your opinion, a better bet, a smarter bet right now? Give us some ideas of where you would be more comfortable committing capital.
Well, I think it's, when you look at artificial intelligence, we look at kind of a picks and shovel type of approach, like in a gold rush, sell the shovels, sell the picks. In this instance, it's the electricity, complex. I mean, no one really talks about it, but, a Google search today compared to a Google search with AI takes 10 to 15 times as much energy.
Wow, I don't know if that is accurate. 10 times more energy for a search on, with one of these LLMs. When he talks about picks and shovels there, a lot of people would think that NVIDIA is a picks and shovels thing. Or now people are starting to say it's not just a chips company. There's a platform there. They've got software. They're looking to be an ecosystem with high switching costs that people can't switch from. But people have talked about and thought about NVIDIA as a picks and shovels play on the AI revolution, whereas, your Googles, your Microsoft in league with OpenAI is really the heart of it. So NVIDIA is selling them the picks and shovels. But as he says, the energy grid, and Steve Eisman talked about this lately. I did a video to do with Steve Eisman, who's very bullish on the economy and on the stock market right now. And he is looking at the grid. He just talks about the grid and infrastructure in general, including AI infrastructure. So that's what he's thinking in that direction too. And the power grid is obviously going to have to expand with electric cars, and people talk about crypto and AI now. It's kind of, energy is definitely seems to be somewhere that's going to have to grow in the next decade or two for sure.
And that hasn't really hit the market yet. And so I see energy companies, GE Vernova as an example, as really benefiting from that. So you can make money around the edges, I think, in a more sustainable long-term way, because our utility industry, our grid, all of that needed upgrading anyway, and this is just going to accelerate the need for that.
That's what Steve Eisman's saying as well. He mentioned one company there. I must say that what I'm saying here is not investment advice. I don't give investment advice, and you need to do your own work, your own research, or have a professional investment advisor before you make any kind of investment. There's no recommendation here. This is just for entertainment and general education purposes. I haven't looked at the company he mentioned. It'd be interesting to kind of look into the energy sector, I think, in terms of infrastructure there, as he says.
A lot of those stocks have been bid up as well this year, and their valuations, one could say, are getting stretched too. But you think there's more upside for the utilities and some of the other sort of infrastructure providers?
Selectively, on a valuation basis, they still look, much cheaper and more sustainable long term. I mean, the building out an energy complex, building the grid, that's a probably a 15, 20-year process at this point. So I think there's a really long runway. Intel, for example, if you look 3 years out, 5 years out, when they get their CapEx starting to churn out revenue, they've got a very, very bright future. They already have it.
I don't know about that. Well, I'd have to look into Intel. It hasn't been doing so great lately, but we'll have to see. Now, I've talked about NVIDIA and other AI stocks because they are the talk of the day. On this other channel that I've got here, Stocks Today with JJ, the new channel. If you haven't, check it out and do subscribe over there if you want. It's a daily news where I'm reacting to daily news, and a lot of it is these popular stocks. It's popular news, so it's quite different to here. We're looking at a value investor thinking about the long term here, but this channel is something different. It's sort of day to day, a space where I can do that. So if you want to get that kind of content, do pop over there. I'll put a link in the description to that if you want to get in on that.
Have a chip that they claim is going to be faster than NVIDIA's. There's not, and again, I'm just trying to put a cautionary tale and some reasons where investors should be cautious, because this is where people lose a lot of money. You guys have talked about it. People have been around a long time. Look at Cisco. Cisco had the largest market cap of any company in the world. When these things turn, it's a long recovery.
That's true. And this is his main message. He's sort of saying be cautious here, because this has happened before, and I've talked about it before. Back in the dot-com bubble, there were many companies. Cisco, he talked about Coca-Cola even there, which wasn't a tech company. Microsoft got us to a $600 billion market cap prematurely. It went way down. Amazon went way up, even though the business was doing really well the whole time when the roller coaster of the stock market went. So that's his main thesis, his main caution here.
People forget it took 13 years for Microsoft following the peak in 2000 just to get back to where it was. That's a long time for investors that are used to making money every day.
Yeah, good reminder, Tim. Thanks a lot.
Yeah, I can see that. It did take a long time, and people did not keep it. It's hard to imagine, people here at this point in time who have NVIDIA or who bought it recently, holding for 10 years, if it does happen to go down that much. That would be a big stretch especially for momentum, and momentum turns. Now, I do talk about more of these things on my Patreon. So I'll show you here. I put collections up here. I have weekly investing updates for not a lot of money per month. This costs, and you can also join as a free member if you want to. You'll get the early access to all the public videos, all these videos that I do here, and ad free as well. I've also started the stock analysis, secret sauce stock analysis, bit of education. I've done one so far. I'm going to do about one a week. The basics, the fundamentals of stock analysis, if you're interested in that. So I'll put a link in the description, and I'll see you over there if you're interested in that. Also, I'm going to put a link on the screen if you're watching on YouTube to the video that YouTube thinks that you should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening to this, and I'll see you in the next one.